Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about GBPJPY. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. So let's start here from the monthly time frame. The first thing that we have to notice is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows. We clearly have bullish structure here. And what we can notice is that we just had the break, retest and rejection to the upside of a quite important level of previous monthly resistance, from which both these rejections to the downside were created, which the market has now broken to the upside, retested as support, and is currently rejecting the level to the upside. Now, this is a very common way of the market to behave, because when you have a previous level of resistance, which is respected already in multiple occasions, and the market then breaks above the zone, what you expect is the retest of the level and the continuation to the upside, which in this case is exactly what the market did. We had the break, the change of this level from previous resistance to support. The market retested that previous resistance turned support and is currently in the process of rejecting it to the upside, which, as we just said, is exactly what you expect in a situation like this. Dropping down on the weekly time frame, what we can notice is that also here from a weekly standpoint, the market looks like it is in a very clear uptrend. Also here, the market has been creating weekly higher highs and higher lows. Right now we are in a new higher high area, so in a new impulse phase, creating more bullish continuation away from this level. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. This appears even more clearly if we go down on the daily time frame. Here on the daily, we can see a perfect impulse to the upside followed by a correction. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what this shows us is that the market has retraced exactly to the area in between the 50% and 0.618 Fibonacci retracements. Now, this is not by chance. This is a very common way of the market to behave, because what we have here is a correction to the area which has the highest level of confluence. In fact, the 50% and 0.618 Fibonacci retracements in this case are exactly the levels that are lining up with this previous zone of previous daily resistance, from which these rejections to the downside were created, which now that the market has broken it to the upside is turned support here. So what we have is previous horizontal resistance, a level that already in multiple occasions, because we can see that here and again here was acting as resistance, then the market broke above the zone. So again, as I just explained a few moments ago, a previous level of resistance, once it is broken to the upside, becomes support. The market has retraced to that previous level of resistance, now turned support, which is a confluence of support zone, because we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this area. And as the market was testing this zone, since it is a confluence of support area, there is an increased probability of seeing a lot of institutional buying of GBPJPY in this case inside of this area, because we have both the persons that are looking at the 50% and 0.618 Fibonacci retracements. We also have the people that are looking at support and resistance areas. So we have previous resistance turned support, all lining up inside of this zone. So you have an increased probability of seeing a correction to this area and then the rejection to the upside. And in this case, that is exactly what happened. And actually, in most cases, that is exactly what happens. The market retraces to areas which have the highest level of confluence before then continuing higher. Now, if we move to the commitment of traders analysis to see what institutions in the market are doing, and we look at the data for the GBP, what we can see is that even though we're missing the very last few reports because of the US government shutdown, we are still seeing an increase of the net positions from minus 33K to minus 1.9K with the last reports that we were seeing. So if this trend has continued, we are now actually in a positive net positioning territory. So we're actually currently with positive net positions, which means that we now have more longs than shorts, because already in the past, we were already seeing institutions closing their shorts going from 112K down to 86K and increasing their longs going from 65K to 84K. So institutions were already adding longs and closing shorts. We move to the JPY and we can see that the actual complete opposite was happening. Net positions were getting decreased. We went from 179K all the way down to 79K. So essentially 100K net positions getting closed, with shorts here being added, going from 21K all the way up to 96K shorts from an institutional perspective, longs getting decreased from 204K down to 176K. So institutions are adding longs on the GBP and adding shorts on the JPY. So they're making GBP stronger, JPY weaker, which means that they're making GBPJPY stronger. Because obviously, in order for GBPJPY to go higher, you want a strong GBP and you want a weak JPY. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description, so you never miss new updates. Now, back to the analysis. So here on the daily time frame, what we can see is that we are rejecting, as we were seeing previously, this confluence of support zone. And we can also notice that we actually have quite important structure lining up around this area. This zone, in fact, if we look closely, was acting as previous resistance here, again resistance here, again resistance here. Now the market has broken this level to the upside. So all this previous resistance is now turned support here. So if the market will now retrace to this area of previous resistance turned support, there is good probability of seeing institutional longing inside of this zone, further increasing the probabilities of a potential rejection to the upside inside of this area. So if we will see the correction to this previous resistance turned support, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.